Hi, welcome to Bond Bytes, a daily bond market highlights from INR bonds. I'm Arjun Patsati. And in today's market, we highlight a debt IPO that saw a demand for rupees 1 lakh crores. And in this IPO, retail investors were just not allowed to participate. And it's a shame. I'll talk to you as just after I take you through the market highlights. The 10-year gsec yield was flat at 6.85%. Sensex Nifty and the rupee trended higher on falling risk aversion as Russia and Ukraine came on the table for talks, and the U.S. Treasury yields rose to over 2% 10-year USD yields on a very frightening inflation number in the US, while in India, the wholesale price inflation was over 13% levels, indicating the sharp rise in raw material prices. And talking about the debt IPO issue, just download our Quick Invest by INR app, bonds app, where we have curated a list of bonds for retail investors. Of course, retail investors were shunted out of this very good issue of bonds, but we in the Quick Invest app, you'll find very good bonds for investments, and with all the information that you need to invest and the straight direct investment process through the app. Download the Quick Invest app by INR Bonds on iOS and Android. And coming back to the Delhi Mumbai Expressway issue, the Delhi Mumbai Expressway Company, which is 100% subsidiary of uh, Delhi Mumbai Expressway Development Limited, which is a 100% subsidiary of the National Highway Authority of India, is rated AAA, given the highest safety rating by rating agencies, largely because it is a subsidiary of NHAI. And NHAI, as we all know, is the Highway Authority of India and is funded by budgetary support from the government. So the credit risk, the risk of the issuer is as good as central government risk, which will not default. And this issue is very, very attractive in a stage where in a time of rising inflation, where the WPI is over 13%, and where interest rates are looking to head higher, as we all saw, U.S. Treasury yields are higher, then we see that there is a lot of demand for floating rate bonds. And this bond is a floating rate bond, which is benchmarked through a 3-month Government of India issued Treasury bill. It's 3 month, and the interest is payable on a quarterly basis, and the reset the and when interest rates rise and Treasury bill yield rises, then the yield on the bond also rises. But more importantly, the spread over the T-bill, which is the rate of interest that the bond offers over and above the benchmark 3-month rate, is 6.85% at this point of time, which is 311 basis points or 3.11% over the 3-month T-bill rate. And so for example, if 2 years down the line, the treasury bill rate, because of inflation and interest rate hike, goes to 6%, this bond will give a coupon of 9.11%, which is very, very attractive, as we all know. And this kind of AAA rated bond is not available at this rate for a floating rate bond. And more importantly, this is a 15-year bond. But after the end of sixth year, which is in 2028, the company issuer will redeem every year in equal installments. They'll redeem the bond in 10 equal installments every year starting 2028. So from the sixth year to 15th year, there'll be redemption of 10% of the issue size, 10% of the face value, which is rupees 1 crore, or they will redeem rupees 10 lakhs every year starting in 2028. So an investor can, and so this is called what is called a strip, STRPP, or separately tradable redeemable principal um, parts. So this is a strip, and so investors can actually buy this bond and strip it as, and sell it as a 6-year bond, 7-year bond, 8-year bond, etc. when required. And investors who have a 6-year, for example, they require a 6-year bond or they require a 7-year bond, they require an 8-year floating bond, they can buy this bond. It's a very attractive issue, and it would have been ideal for retail investors who are struggling to find good bonds, good fixed income instruments to invest in, which is high safety, but yet offering a good rate. And in an uncertain environment, floating rate bonds are extremely attractive. This is the best bond that is available in the market, but with it's not open for public, and this issue has been it's a 5,000 crore issue, 5,000 crore issue, and it's right now that it's oversubscribed to an extent of at least 1 lakh crore. So everybody is wanting to buy the bond, but unfortunately, because of the fact that these bonds are not allowed for retail investors are completely out of this. And having said that, I think SEBI should make sure that such kind of bonds, especially by a very reputed company and doing a key project for the country, which is the Delhi Mumbai Expressway, which is going to make travel uh, between Delhi and Mumbai as easy as it's traveling between Mumbai and Pune through the expressway. This is going to benefit a huge the whole country, and if and with such high safety, if retail investors should be allowed to invest in such bonds, as it gives them a very good savings option. If they are allowed to invest as low as rupees 10,000 to then and help them these bonds get listed and traded. I think this should be benefit the whole bond market, the debt market, and investors too, and get their faith in the system where they are allowed to participate in such issues and not be shunted out of such issues. Thank you very much for listening in, and do not forget to subscribe to your YouTube channel if you've not done so already, and do hit the like button if you like the uh, bond. Thank you very much.